Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Friday, February 17th, 2023. Before I click on the charts, just want to encourage you to please click like if you would each and every time you watch the daily Tesla report and subscribe to the Wicked Stocks YouTube channel. You'll be notified each time new content has been uploaded. That includes the daily Tesla and daily Apple report and occasional stock picks we actually put out for free on YouTube, which we did yesterday. We also, today, by the way, wickedstocks.com put out one of its two stock picks that we put out every week. Today, I'm doing this obviously on Thursday, just so you know. So I record these the day before, right after the closing bell, and I'm talking about Friday on Thursday afternoon. This is predictive. But on Thursday, we put out a stock pick on Monday.com. The Israeli technology company put out positive earnings. We've got pretty good trade levels for you as we anticipate a directional move in that stock in the weeks and months ahead. In the last week, we've done Google and Microsoft and Applied Materials that you never see actually on the YouTube channel. So check us out at wickedstocks.com. Let's take a look at the charts here. Tesla, I'm going to work my way from the big picture, longer term, into the near term for the day itself. And just a reminder that in early January, we bounced obviously off of channel support that is presently in the low 80s to mid 90s, this band of channel support on the way up. As I've been saying, we anticipated the possibility of topping out in the channel structures that are now in the 153.15 to 161.26 region. But positive earnings set this market on a bullish path, and we settled several weeks ago, almost a month ago, above this band of channel, what is now support, in the 153.15 to 161.26 region, then signaling a 2 to 3 month upside objective at 252.77. This channel top at 251.66 on the daily chart, anticipated as our 2 to 3 month objective. And so we have different time horizons now, and I've been mentioning how following a settlement above this 153.15 to 161.26 region, that a long-term 5/8 Fibonacci level was in reach over the following 2 to 3 weeks, and that is essentially what has played out. We came pretty close to testing 221.25 on Thursday, not within 1%, but certainly within 2%, and following the near miss of 221.25, we did elicit a key reversal high today, and I'm going to show that right here. Key reversal high, a new pullback high following the January low, and we settled below Wednesday's low. That outside day, that engulfing pattern is oftentimes indicative of an overbought market. I'll put it that way. But I'm going to be of the not so fast category. I think what this means, or what it entails, this key reversal high, is the likely test, possibly today, of a band of meaningful support. We have a horizontal channel bottom over the last week and a half of trade at 190.53, and we have a new rising 1/3 speed line that is based in part on Thursday's high at 184.80. This area is slowly converging, slowly rising. It is our pullback support. The 2 to 3 week time frame remains bullish above 190.53, 184.80 as well. This range, good area to buy into. If your time horizon is 1 to 2 weeks or 3 to 5 days, we're expecting then a rally back to 221.25, possibly by the end of next week, where we could top out on a weekly basis, as you see here. That is the 2 to 3 week time frame. It remains that above 184.80. Were we to close below 184.80 today, which I'm not anticipating, but if over the next few days we do settle below this rising speed line at 184.80, then the 2 to 3 week time horizon shifts into the bearish column, and I would expect then that 143.37 rising speed line over that time frame, which is, as I say, rising, and over the next week and a half, 2 weeks, will converge entirely with that long-term base of support on the daily chart, 152.91 to 161.33. This is the area that we settled above 3 or 4 weeks ago, then eliciting that 2 to 3 month buy signal to the 252.77 long-term channel top, better illustrated here. So I just want to mention that if you look here, if we close below 184.80 today, and I don't expect it, I think it's a long shot, but if so, 143.37 expected as a 2 to 3 week target, rising daily, and over the next week and a half will actually converge with this band of channel support. So in other words, what is it, 153.15 to 161.26 will drop into the 140s, 150s over the next week or so, where it will meet and converge and intersect with this rising speed line. So closing below 184.80. If you're long this market and your time horizon is 2 to 3 weeks out, you should consider exiting that long position and going short if possible, whatever that means to you. It could mean buying 150 out of the money puts that don't expire. I'd go a month out, even though I don't think that move would take any more than 2 weeks. It's just if you go a week or two out, you could have a beautiful play executed only to see that option expire worthless as you approach the final day of the life of that option, and we're trading right at strike. So I would go a little further out if you can. The other option play here is if we're dipping into the 190.53 to 184 region, that could be an opportunity to buy 220, 221 out of the money calls that don't expire for at least I'd go a couple of weeks out. And in terms of the 2 to 3 week dynamic, if we happen to reverse and trade higher today and over the next few days close above that 221 and a quarter long-term Fibonacci, then your 251.66 level becomes the next 2 to 3 week target. And once again, 251.66 is the 2 to 3 month objective that's been at play now for about a month, following the settlement about a month ago above this band of channel support. So if we were to test this 252.77 on the weekly chart, 251 and change on the daily chart over the next few weeks, this is a significant zone of resistance. This is where you liquidate your long positions, whatever the time horizon may be, unless your time horizon is several years out. But because that 252.77 channel top just might contain buying not only on a quarterly basis, but even into later year, as we could fall off from that in a meaningful way. And inversely, it would be a settlement above 252.77 at the end of a week that would signal a long-term buy signal for Tesla. I would expect then appreciable gains in the months to follow. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Let's go back to the day itself. Most of you tune in for the day itself. And, all the minor points have been carefully chosen. I've resurrected, if you will, that 208.24 Fibonacci level. Do I have that illustrated anywhere? I don't today, do I? Do I have it here? No, I don't today. Bear with me here as I comb through my charts, and I don't have it illustrated anywhere. But I will mention that and show you that this August high against the January low, half back up is 208.24. And I think it is a level that just might contain daily buying pressures today. We had a low early, actually midday on Thursday at 209.74. There's a lot of things going on there, and I just picked 208.24 because it is still a longer-term Fibonacci level. It may contain daily buying pressures, and I will say that if we close above 208.24, we should, on Monday of next week, test 221 and a quarter, that Fibonacci level that may well contain buying on a weekly, possibly monthly basis, as I've been saying. Back to the day itself. On the way down, there is 199.09. That is a very short-term Fibonacci on the way down. I think that's a 5/8 coming down. But be careful. I really, at one point, just had all of these minor points. Be the key reversal high, the high volatility we're in. We could whipsaw through this entire area all day. We could test 190.53 in the morning and rally back to 208.24 within the day. If we push through 208.24, FYI, the high settlement price so far on the move was put out on Wednesday at 214.24. We pushed through that just a bit on Thursday, 217.65 was the high of the day. So if we push through 208.24, 215.24 is likely. If we close above 208.24, 221 and a quarter is likely on Monday, where we could top out through next week and fall off again from there. If we close above 221 and a quarter, the 2 to 3 week time frame signals that 251.66 long-term resistance area. Downside, if we break 199.09, I think you should allow 190.53 intraday, which is the start of a range down to 184.80 that can contain selling not only through next week, but quite possibly into March trade, as that 251.66 long-term target is in reach over the next 3 to 5 weeks above 184.88. If we close below 184.88, long shot today. I don't expect it, but if so, the 2 to 3 week time frame shifts negative. That 143.37 speed line expected within a couple of weeks, which by that point in time will be lining up nicely with this longer term channel support that is presently in the 150s, 160s. I just hit 10 minutes. I don't like to go over. I'm going to leave it at that. Please click like and subscribe. Check out wickedstocks.com. We have a lot going on there, and I'll be back actually Monday afternoon with Tuesday's Tesla report, because Monday is a federal holiday. Markets are closed. You have a great weekend.